Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me about it. If you're not on my email list, click below in the description and join it because there's a lot of things going on in the financial markets. And today I got a very special guest. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing today, Dave? Yeah, you there?
Yeah, can you hear me?
Yeah, it just went unstable for a second.
I have my projector plugged into my computer and I took it out, so that's probably why it was. But no, yeah, it's good to be here. Yeah.
Well, we were seeing some interesting activity in the financial markets, so we haven't spoken in several weeks. But today, the Dow is down, the Nasdaq's down, even the ARK ETF is down, and rates are, yields are going up. We've seen some really aggressive talk from several Federal Reserve officials about the need to raise rates to stop inflation. In fact, the mortgage rate's gone above 5% the first time in years. But gold and silver are actually up this morning. But do you think that's temporary? Do you think they will get hurt by, the tough Fed talk too?
Inflation was double digits, and even though interest rates were high and went double digits themselves, they were a few percent below, the rate of inflation. So usually gold tends to do well. And of course, with the high debt that we have now in the Western world, at the government, actually at every level, we can't really have, and I'll talk about those 5% mortgage rates in a second. We can't really have more than a few percent higher on the short-term interest rates by the government, by the Fed. Will just be too high, right? So that's the real issue here, Mike, is that okay, I do think that they are going to raise rates. But remember, they're really behind the curve. If you're looking at like a normal type yield curve with the 10-year bonds at 2.6%. That's where it is today, which by the way is the highest level it has been since 2019. It's actually higher now than it was pre COVID crisis. So anyhow, so if we look at interest rates being like at these levels, really the Fed funds rate should already be 1.5% or 2%, and it's still zero. And of course, the 1 and 2 year bonds are really starting to go up in yield as well. I think I don't know because longer term rates are up today, but for a while, the 2 and 30 year which was flirting around zero and having negative rates, started going up. Now it doesn't seem like a big deal. Japanese rates are at about between 20 and 25 basis points. But again, Japan's debt is so high. If Japan's 10-year bond were to go to 1 or 2%, they'd essentially be bankrupt. So I think we are seeing these inflationary pressures finally put upward pressures on interest rates. Now, that what we don't know, the flip side is, once they really do start to raise rates on the short end and say the market, I think you probably agree with me. I think that this is a bear market rally. I think the market is now rolling over. It's probably completed that bear market rally, judging by the sell-off of the last 2 days. And I think judging by this, that when stocks actually start going down a great deal, when do long-term rates maybe get a flight to safety bid, et cetera, et cetera? Or is it like the 70s and we see higher rates and lower stock prices? And in terms of another market to look at with rates, we talked about gold, and we could talk about stocks. Actually, another two markets. First of all, I'll talk about housing. One issue with housing is housing prices are much higher now than they were at even the 2006 top, right? In nationally, I'm just getting the Case-Shiller home price index in front of me, just to see exactly on average. And in many markets, like in the middle of the country, Denver, Dallas, these kind of areas, the market is way higher than it was in 2006, because the market wasn't really like that bubble so the Case-Shiller index peaked around 184 in the summer of, and for those unaware, the Case-Shiller index is an index of like national housing that kind of takes all the markets all across, the United States. And anyhow, and then it went down to about 134. So about a 40% decline roughly all across, actually about a 30% decline all across the country in 2012 is when it bottomed. And now it's at 280. So that means the average house has more than doubled since the 2012 bottom, right? And by the way, I see that here because I bought my house in 2011. And this is a kind of an illiquid market here in this island in the Bahamas I live on. And I figure by the prices of stuff that's been sold around me, I've got more than a double on the house since then. Now, I just paid off my mortgage last summer, so I don't look at this as some kind of investment or anything. This is where I'm going to live for a while. So, but anyhow, so those higher rates are even more important because now you're paying that 5% mortgage, not on a $250,000 house, for example, like 10 years ago. Now that house is $500,000. So that mortgage payment or the interest payment is double because of that. So I think at some point, even though one thing that's driven this has been a lack of supply because of some of the supply chain constraints, there haven't been as many houses built. And of course, now another issue is also going to be lack of supply of some materials due to the commodity problems arising from the sanctions on Russia, and also just the high cost of materials as well can also kind of prop up housing prices a bit because, let's face it, if your house costs too much to build, you'd rather just maybe overpay a bit for one that's already built. So all of these things, though, are really, really interesting, in terms of these higher rates. Now they're affecting things. And of course, we have these commodity markets now all soaring again, mostly due actually to all the money we printed the last 2 years. I want to really make that clear. Now, this last spike is definitely, of course, because of supply constraints from Russia. But when you printed globally nearly $10 trillion, I don't know what people thought was going to happen. And at the same time, when COVID going on, the governments were printing money, plus had all these restrictions, which restricted, people from being able to buy things, and produce things, because say like a factory had to do social distancing or something in that nature. So anyhow, or there was lockdown, so obviously no industrial production would be going on, etc. So I think, and with commodities, what I find most interesting is this: the last two major busts we had in the stock market in 2008 and the and 2020, COVID crisis was basically both deflationary in nature, and we saw commodity prices tank. Of course, there was that infamous day where oil went negative, or the futures went negative back in 2020. Actually, it was almost about 2 years ago. I think it was almost 2 years ago to the day that we're speaking, right? Which shows you how things have changed. Now oil is over $100 a barrel. But anyhow, I don't think on this downturn. Now, I do think commodity prices might come down a bit as the Fed raises rates, take some liquidity away. But I think it's going to be more like the 01, 02 downturn, where commodity prices can go down a bit, but they're not going to go down a great deal. And the problem with that is, how can you do QE if wheat is $9 or $10 a bushel and oil is say like $70 or $80 a gallon, after a correction? But not at these like these levels. Like if the market falls and they think they have to cut to zero and do QE again, it's like you're going to really have even more inflationary problems, because I don't think these commodities, especially with the supply constraints that because of the Russian sanctions, I don't think that they're going to collapse like they did in 2008 and 2020.
Well, in this type of situation where you said the Federal Reserve really can't do the type of quantitative easing that they did in 2020 and years past, that, would really put like fuel up the stock market and make it go up like a rocket. what's the best way for people to make money then in this situation?
I think there's another factor too with the rates going higher is that in terms of, the Buffett indicator, that being the, market cap to GDP, we have never seen this at a higher level. It's at over 200%. And by comparison, it was at 150% at the top of the dot-com bubble, which was easily the highest level previously. So that's another thing too, is that we're historically very overvalued. And don't look at when they on Yahoo Finance or somewhere, they'll say, some articles saying, oh, the forward PDE or whatever, the PDE on the S&P isn't that bad. That's crap, because we've seen so much financial engineering and the ability to have maybe higher margins due to both lower interest rates and stock buybacks, et cetera. These PDEs aren't really real. You got to look at price to sales again, also at an all-time high, So I think that you've got to be very wary of stocks. And I know a lot of people look at me as a perma bear and the whatnot, but I did get bullish in 2019, and I didn't really try to fight the market after the lows in 2020. Now, we invest in different ways. Mike and I both do some venture capital, invest in small deals. The way I did was I wasn't investing in, NVIDIA or Amazon or Apple or anything. I had these small little crypto deals, a small security deal, which did pretty well. And, I bought private placements in these things. Another one was a pharma deal. So I was doing things like that because I wasn't as bearish, but in about the middle of last year, I started turning really bearish. And I think now I think we have so many novices in the market, so many first-time investors, meme stocks, crypto people. They don't know what a bear market looks like. They don't, and we're not talking about people that have only been in for 10 years while the market's essentially gone higher. We're talking about people that have only been in for 20 months, since just after COVID started. So they've never seen it. So right now, I think the market is topping out similar to how it did in, March to August of 2000 or July to October of 2007. And we're seeing this top. And I think we might have seen this fail. June puts in NVIDIA. And actually, just, I had a straddle on. I sold it when NVIDIA rallied from about 220 to about 260. I was out a little early, but you never get these things perfect. I sold my long position. And anyhow, and the things I'm talking about NVIDIA is, or Apple will be another one I have puts on that as well. The problem with those companies are going to run into is supply chain issues. China is shut down, Shenzhen and Shanghai. These are the two big, kind of tech areas, economically active areas of China. So they're going to have problems getting chips, like basically, the province where Apple, makes their iPhones in China, where Comstock is the name of the company that does it. That factory is essentially shut down because, of the lockdowns there. So that's, and I think something is happening in China as well. If you go look at what you put up the Shanghai index there, and if you go look at what these Chinese internet companies have done, like Alibaba, like Baidu, that's more than just like, oh, this is a correction, blah, blah, blah. These things fell 80, 90%, like some of these things just from, like last fall. Like you can see Baidu, and that's one of the better ones. That one down 50%, but a lot of the smaller ones are down 70, 80% during that low. So, maybe there's a reason for China. And recently he's been on record saying that he thinks that the whole Russian thing is kind of the end of globalization. So maybe they just kind of dumped, and you have a huge investor like that dumping, that could have kind of caused that short-term capitulation. So anyhow, and then of course, China is actually talking about housing, is having their own housing bust. similar to what the US did in 2008. Like the sales have collapsed, and actually China is cutting interest rates, just like the US did in 2007, 2008, while we're raising rates. And so that's why in the short term, we've seen this spike in commodities, and everyone thinks I'm a commodities guy, and I guess I am. But I think in the short term, we kind of probably don't have we'll get squeezes like we had in nickel, like went on jet fuel the other day, went over $7 a gallon, which is like easily an all-time high. I think we'll get these squeezes in certain things because probably some people are caught short, but I think commodities will probably, kind of, you can see that big move there, consolidate that move, and maybe even move slightly lower. Now, of course, oil and gas can move higher over the summer because of the summer driving season. But I think as a whole, commodities are probably going to find some kind of base here.
Well, I know you only have a few minutes left because you got a meeting in a few minutes, another meeting you got to go to in a few minutes. So I just want to ask you real quickly, what's your opinion on the mining stocks?
On the mining stocks, yeah, I'm still pretty. See, I think gold is in a different scenario because I think gold also, another thing that's happening. Look, there's also no coincidence that this gold move. Go look at that intraday bottom in December. Essentially, it started when the market topped. Actually, if you even look at that secondary low, kind of in early January, that was the top for the S&P and NASDAQ. So gold has really been trading counter to the market. So I think that, if you get some kind of bear market in stocks, I think gold will catch a bid because it will be kind of like, if you go look at what happened during that correction in 2018 or what happened in the 0102 bear market, and really in 2008, it was happening until everything kind of capitulated right at the end. Gold was moving counter to the market. So we've seen this spike during the Russian war. And by the way, we saw the same thing when the Iraq war started, that there was a spike in gold initially when it started, because war was seen as spending and inflationary. And of course, Iraq was a huge oil producer, and that was going to come off the market, for a year or two, or a lot of it was going to come off the market because of the war. So anyhow, I think that gold can, if we see over the summer and the fall, the market move lower, I definitely think gold can move higher, kind of different from other commodities.
Well, yeah, people could see from that chart I had up that when the stock market got weaker in January and February, that's when gold broke out. So very interesting counter trend move, as you pointed out. Well, as we wrap up, do you have anything else you want to add or tell people what they should get from you on your website?
Yeah, so basically, I've been delayed a couple times. I'm putting together content, but probably over the next week or two, I plan on restarting my paid newsletter. So it's $70 a month. I'm thinking of doing a little Patreon page where Mike and me will do kind of more of these, interviews. So for a lower tier, service, but like a pay service. And then also I have a lifetime subscription, which I usually charge $2,500 a year for, and I'm going to have that half price at $1,250. And also I talked about how I do these option trades. I blast whenever I do an option trade. If you're an option trader and into that sort of thing, I do blast alerts out with that service. And Mike, just so you know, my next meeting, I actually scheduled it for 11:05. So we can't. It's 11 o'clock right now while we're talking. So we do have time. We have two more minutes. But yeah, so if someone goes to addictedtoprofits.net or writes me an email, just addictedtoprofits@hotmail.com, asking about those services. I also do venture type stuff, investment private placements. If you're interested in that sort of thing, I can do that as well. Anyhow, so like I said, feel free to write me or sign up. And like I said, I think today's about the 5th of April we're doing this. So I think probably, within the next week, realistically, we will have this done. Like I'll have this done and set up and ready to go by about 12th of April or so, or definitely by the middle of the month.
Great. Well, thanks for taking the time to talk to me and everyone else. And if you're a random, watching us randomly on YouTube, click the bell or click the subscribe button and click the bell, and YouTube will send you a notification when we do another video. Well, have a good day, and we'll be talking with you later.
Yeah, that's no problem.